Hello and welcome to this Business Today Market Special. I'm Udayan Mukherjee. With me is Abha Bakhaya, and our special guest on the show today is Sandeep Tandon, founder and CIO of Quant Mutual Fund. It's one of the new asset management companies in India which has been making great strides over the last couple of years and has been actually best in class in many of the categories that it has funds in. Sandeep, it's great to have you on the show. Since you are one of those unique fund managers, CIOs who also look at quantitative methods, as your name suggests, quant, in evaluating investments. Let me start by asking you what the quantitative desk is telling you now in terms of market signals. Is it suggesting that there are deeper cuts which lie ahead, or are we somewhere close to the bottom for 2022?
So then, we over a period of time, apart from quantitative and the qualitative, the fundamental work, we have also built a lot of things on the behavior side. Okay. And where we combine in our own framework called VLRD framework, where we give one-third weightage on the valuation analytics, one-third on the risk appetite, and one-third on the liquidity. Okay. So we try to capture, all qualitative, quantitative, and behavior, what we call fundamental Atma, liquidity, the prana, and sentiment, the Maya. We try to capture, and it's really help us in taking a much larger call. So as a house, our macro or predictive analytic models are definitely endorsing that we are if I have to look at from a very near term perspective, I think the fear cycle is actually peaking out. So we are at the cusp of that inflection point. First, let me answer first from a very near term perspective, because that's a concern which a lot of people have. So from a very near term perspective, whether you talk about a dollar index, or you're talking about more of the currency sides, or even the S&P or the Nasdaq, which has corrected significantly, I think we have reached an inflection point where you can expect uh, significantly up move or ferocious move is also I'm not ruling out, because the fear is too high. 2022, the way we have described, is all about how the employed also the most of the asset class will remain elevated, and as compared to 2009, 20 and 21. So you have to play for a smaller swings in the market. It's going to be very challenging and difficult year.
Hmm. So, are you saying that near term we may have a bottom in place and we may have a sharp rally from here, but you are not confident that a final bottom has been played? Sense lies in actually playing these sell offs and rallies intermittently from a tactical point of view, but don't get wedded to a view that a clean trend will be visible in the next 6 to 9 months.
So let me then give you first our big picture, which is like a decade perspective and how it's playing out. It'll give you a fairly good sense. So if you recollect right from 2000, March 2020, when fear was very high, that's a very classic bottom, because risk appetite was the lifetime low, whatever data we have, and the liquidity was also lifetime high. So it's a lethal combination of bull run. So that lasted till September 2021. And by September 2021, we saw a very unique thing. Risk appetite started for global assets started declining. Money flow towards global equity also was a multi-decades high, and there was a liquidity was also started shrinking. So if I have to see, there was a euphoric move into by of September 2021, yes. But if you dissect this euphoria or this money flow analysis, you'll this very interesting data point which came out, that euphoria was confined only to the growth stocks. Okay, which is, if you want to further dissect into a consumption name or the new age technology or the technology companies, where value is bottoming out. So if you look at from a perception analytics, the way we define the market in September 2021, if I have to take a big broader call, the growth stock perception analytics, or what we call multiple and valuation analytics, has peaked out maybe from a decade perspective. So something has changed from September 2021, and could be a bigger and longer term call, because this is the area where grossly over ownership exists, and this is a cycle which has been played out for multi years now. So that is something big change which we are highlighting. And I think from a larger perspective, you will see this bouts of volatility, you will see recovery in these stocks also. But from a longer term perspective, I think something has changed. So value should be your core holding. That's what we have done, and growth should be your tactical position. So if I have to look at, this is a larger perspective which we believe which is
Okay.
going to play out. And from a very near term perspective, I think whether it's technology or whether it's a consumption name, they are also significantly oversold right now. So, and the way panic is, so we want to capitalize on the fear. So as long fear remains high, we like to participate. And whenever you see complacency, we like to prune down the exposure.
There is no great greed which is visible in the bank nifty, Sandeep? I mean, it's a segment which has underperformed quite a bit. Would you put it in that category of growth stocks which did well over the last half a decade or so, or last decade or so, and which will continue to underperform? Or is your call contrarian on the financial space now as a fund house?
Okay. So if you really, since we're talking about the growth stock peaking out, and if you dissect the bank nifty into private sector and public sector banks, and then you try to look at the perception analytics data, which we try to look at from the behavior finance point of view, very interesting thing is coming out that perception analytics for the PSU, for the public sector, for the private sector bank has made a long-term top. Okay, which means the valuation analytics or the valuation multiple, which we have seen in last many years, will shrink and decline. Where PSU banks in the exactly in the opposite side. So in their early stage of recovery, whether you talk about the one of the largest public sector banks or the top three public sector banks, is so that's a data point which is showing. That does not mean we are very negative on financials. We believe financials will outperform IT, financials will outperform consumption on absolute basis as well as relative basis. But within banking, if I have to take a larger or longer term call, then I will like to take a longer term calls on the PSU banks over private sector banks.
Sandeep, I notice you've been trimming your exposure as a fund on technology. Tech, talk to us. I mean, this is, of course, in line with the overall philosophy you've just articulated, but give us a sense of what else you're doing in terms of changing around preferences and favoring what you feel are going to be more growth-oriented names to go with.
So, as I said, right from September 2021, we have toned down our technology. We don't own any technology name except one, okay, which is more of a product company and less on the services side. The way we look at our data points, what is endorsing is all the neglected territories. So we like sectors like power, media, energy, capital goods are shaping up very well, defensive, okay, financials, which we talked about, PSU as a theme. So these are the themes which is looking telecom as a still theme still continues. So these are the themes which we are overweight as compared to FMCG or consumption names or even IT or a new age technology companies where over ownership is there, and our valuation of perception analytics have endorsing a longer term top. So this is where we have realigned our portfolio.
I note that many of your funds have names like Vedanta, ITC, Sandeep in your portfolio. Is it staying with that overall call that this year value as a theme should outperform growth? Do these names fit that bill?
So it fits cover that aspect also, but we bought metals quite early, right from October 2020 onwards. We have been bullish on the metal SSPs because if I have to give a much longer term perspective call, right from 2019 we have been talking about that 2020 or this current decade belongs to commodities. So we are extremely bullish on commodities as a space. It's a structured bull run which is unfolding, and we are very early to spot that. And within commodities, we believe agri as a commodity will give the best performance. Okay, if I have to take a big call, which asset class I will to deploy very largest money, I think is the agri. Unfortunately, in India, you cannot play that theme directly. That's the reason in our portfolio we have relatively large exposure towards sugar stocks or metal stock wherever we can participate. Okay, because you cannot play these names directly. And metals, yes, and of course some of the names which you mentioned, they are part of these thesis. And though from a very near-term perspective, there might be challenges on the metal space because one of the near-term cycles are peaking out. But if I have to look at from a longer-term perspective, we remain very constructive in these things.
You know, Sandeep, you're a fund house now and you don't invest only in equities. You have bond funds as well. So I want your perspective. I mean, even the kind of quantitative bearing that you get into your analysis, what do you expect to see with interest rates over the next 6 to 9 months in India? And what would you suggest could be the returns from fixed income funds this year?
So let's talk about US market first because that's the area where we have more than 100 years of history to talk about, and India is very, very limited. Okay. See, as I said, right from 2019, we have been showcasing that from 2020, the commodity prices will be started rallying because of a lot of earth-related changes. Earth analytics data is endorsing that, and from 2021, the inflation will come back. Now, if I have to look at from a decade perspective, let me give you a very interesting data point. We believe that both inflation and interest rate, particularly on the developed markets, are heading high. And we believe that they can have potential to become 6 to 9 times whatever bottoms we have seen in 10 years, like the 1.18% we have seen in 10 years yield. So something 6 to 9% what we should be. That's a very conservative number by 2027, 28. That's our big macro predictive analytic models has been showcasing. That's what we have written in our book also. So we remain very constructive from a longer term perspective. But as you say, that all moves will be not be linear. Quantitative easing started somewhere in 2008-9, and we all felt it is one of the event which is unfolding. But since then, we have seen 5 rounds of quantitative easing. So if I have to look at from a next 8, 10 years perspective, I believe given the volatility in the global market, both from a geopolitical perspective as well as the noise level on the commodity side, I believe you will see multiple round of easing and tightening both. So both easing and tightening will happen in this in next 8, 10 years. I don't think it will be one way tightening which market is expecting. I think if global data points change, and then people will also react. And that's the way in last many years, the global central banks are working in tandem. So I don't expect one way or linear moves happening in these markets today because of logistic constraint. Also, we have seen high level of interest inflation, which is happening, which might settle down in next 6 months time, 8 months time, and then you will see some sort of easing happening. But from a structure bull run, we believe this cycle is going to stay for a longer term perspective, and hence we have tried to avoid it consumption names or the sectors or the companies which could be more impacted from the rising interest rate and rising inflation environment. Relative basis, India will do very well because we believe this is the bigger problem from the developed market. If I have to look at just larger perspective, let me give you some data point. The global risk appetite for developed market has peaked out, and global liquidities also started shrinking. Where if I look at the Asia-centric emerging market, the risk appetites for these countries are significantly low, particularly China, which contributes a very large portion of these Asian market risk appetite, which started declining, now has bottomed out, started inching up. So how this, how money shift from high risk to low risk environment, something similar, we believe that a lot of liquidity will shift from the developed market to emerging market, and that also fits very well from a value and growth theme because all emerging markets are the value theme. So we believe the money will shift towards this thing, and next 1 decade belongs to emerging market, and within emerging market, Asia-centric emerging market, and within Asia-centric, India should do very well. And given the agri-focused economy which we are talking about, we think the impact of inflation will not be felt up to that extent the way we are seeing in the developed market. And today we are talking about inflation on the food inflation or the commodity price inflation. My biggest worry for developed market is that wage inflation is knocking the door, and that will create havoc in this market. And India will be relatively, I'm not using absolutely, relatively more isolated because given our um, demography aspect also, demographic in our favor and the population which we have, relatively we will be in a better shape.
Sandeep, you're always so bullish, and the fund has consistently outperformed. We've seen that. You've described some of your philosophy. I'm curious as to, going forward, which are perhaps the buckets that you feel could surprise. For instance, small caps, and in the past we've seen that fund do very well. At a time like this, is it too risky perhaps to build up one's positions in a small cap fund vis-a-vis a slightly less riskier, perhaps diversified or large cap fund?
So I will again link with just for the explaining point of view, like the risk appetite which peaked out in September 2021. Since then, we have pruned down our exposure in the smaller cap stocks, and prior to that, right from 2021, we were more skewed towards mid and small space. But if you ask me let me answer more from a longer term perspective, given the capex cycle which is come after 10 years, and the capex cycle has multiple second and third level of derivatives, which clearly means that smaller and mid cap space also has a potential to do outperform these market. If I have to, let's take I don't talk about 10, 20 years, I don't have that vision. But if I have to talk about next 2, 3 years perspective, 5 years perspective, I think the mid and small from a medium term perspective has still potential to outperform. But But if I have to talk about from a very near term, because we are also going to face challenges from a near term perspective, because and that's how it's going to play out. So if I have to look at from a very near term perspective, I think mid and small also has potential to recover, because the risk appetite for the global asset classes last month onwards has started inching up, which will support both mid and small from a very near term perspective. And whenever you see a very classic sign of any trading top or euphoria happening, that could be the time you can prune down exposure in these names and try to rebuild. Because as I said, 2022 will be relatively, or 2022 and 2023 both will be more volatile as compared to the past 2 years. So hence you have to really play on these cycles and try to optimize your returns. That's the best way you can play this cycle, rather than saying that I'm holding these stocks. Buy and hold strategy in this particular environment, because we work on the concept of adaptive asset allocation, or trying to understand how the global markets can unfold and adapt that environment. With this background, it will be very challenging if you take this buy and hold strategy, or people talk about compounding stories from a longer term perspective. I think that cycle has peaked out. So you have to change your strategy, at least for the next 1 decade perspective, or the current decade.
So Sadi, finally tell us what your view is, because we started this discussion saying that 2022 will continue to remain volatile. Do you see the possibility of this market making a new top somewhere in 2022? The Nifty made a top of 18,600. We've not challenged that over the last many months. Do you see that possibility? Or conversely, the bottom that we made recently of 15,800 or so on the Nifty, do you see that being challenged or violated in a bout of extreme volatility later in the year?
So my sense is that, since I just talked about that there's a high possibility when risk appetite is inching up, I don't rule out, okay, that market has potential to make a new high even as early as in the month of May also, because this is the current mindset or negativity which is surrounded. And so I'm not ruling out, but if I have to say with stick my neck out, I think market has not seen any sort of euphoric top. So if I have to say with good amounts of conviction based on our predictive analytics model, definitely 2022, this is not the top. You will see a new lifetime high, if not in the month of May. Though I still expect that the month of May can give you a decent rally or significantly up move globally, not only India. I'm talking about global market also. But if I have to talk about maybe the calendar year 2022, definitely new highs is going to maybe in the last quarter of calendar year, somewhere around that level. Because if assuming whatever I'm talking about plays out well, this rally which I'm expecting, that's the reason we are fully invested. If the cycle plays out very well, then I like to capitalize and booking at higher level, and then you can see a maybe deeper correction before you see a new high or lifetime high again. Coming back maybe in the last quarter of this year. So we remain very constructive, because there is no sign, since we are data driven house and we don't work on the gut feeling basis or our personal biases in any manner. Data is not showcasing any signs of euphoria in the Indian market, which we can say, if I have to compare like what happened in 2008 or what happened in 2000 or what happened in 1992 also. So or multiple trading tops which we have seen in last many years. Okay, I don't see any signs of a climatic top which has been formed. So we remain very constructive from a medium term perspective.
Sandeep, good to speak to you today. Thank you very much for your time, and all the best with the Quant Mutual Fund going forward. Thank you.
Thank you, Dan. Thanks.
If you like the video, do like, comment, share and subscribe.